All right, lots to share in today's video. We're going to talk about Michael Saylor thinking about buying more Bitcoin for MSTR. We're going to hear a little bit of Saylor's viewpoint of if would he rather have Bitcoin where it's at right now or 150,000, and his perspective on that right now of all the regulations and good things that have been passed. I'm also going to jump into a little bit on my trading strategy of how I'm trading BMNR on a weekly basis. And we're also going to look at MSTR and Stretch and why Stretch is really leading the way of billions and billions of dollars of Bitcoin purchases for MSTR. So let's jump in. Not tax advice, not financial advice, not legal advice. Do your own research on everything. And let's hear from the man, the myth, the legend here, and hear what he has to say.
Bitcoin 17 years old. Bitcoin after 17 years is a $2 trillion asset, and it's been embraced by hundreds of publicly traded companies and hundreds of millions of people. And it's been almost 100 days since our last all-time high. I think I'm feeling pretty bullish, and I'm pretty happy about where we are. If you gave me a choice, if you said, Mike, you can either have Bitcoin 150,000, but I'm going to roll back the banking acceptance, the options acceptance, the positive regulators at the CFTC, the SEC, or Treasury, or I'm going to roll back. In fact, if you said, I'll give you 150,000, but you have to pick one of these things to roll back. You have to give up the CAMT win, or you have to give up the FASB win, or you have to give up the support of the Treasury, or you have to give up the support of the SEC, or give up the support of the CFTC, or you have to give up the support of the banking community for IBIT, or you have to give up the fact that Citi and Schwab are moving to trade and custody Bitcoin. If I had to give up just one of those things in return for an all-time high, the answer is I would give up the all-time high. Right? And this is like adult-like behavior. I would give up immediate gratification for the next 90 days in order to get the support of the multi-trillion-dollar banking industry, or the most powerful regulator in the world, or maybe the ability to make money or to be deemed as profitable. So I don't think there's any question in my mind. The industry is evolving the right way. The network is evolving the right way. And the last 90 days are just an opportunity for someone that's got clear eyes to buy more Bitcoin.
Brilliant. Super well said from Michael Saylor. You hear from him again and again and again, and he stays consistent to his vision. If you want to know more about strategy, you can get my book down below, Money Game. Also, I'm going to be going over my daily trading strategy today on trading BMNR. So if you want more on that in depth, there's a video down below. It's all free, and you can go snag it. Okay, let's jump in and see what's going on in the world the last couple days. So Saylor thinking about buying more Bitcoin. He's bought a couple $1 billion over the last week. He said he's thinking about buying more and might be telling us something big. So there's a lot of people online, obviously, that are spreading fear, and there's some hating on MSTR. They say the company's struggling. If you look at the stock price, it's clear that the stock is definitely down. But let's just start looking at the fundamentals here of what's really happening with strategy. 22,000 Bitcoin that have been acquired recently, now 709,000. If a company was actually in danger, would they go out and buy billions of dollars worth of Bitcoin in 1 week? And would somebody actually give them the money to do that? So there's lots of action going on with MSTR. It's still an incredibly solid play in terms of the future of the company and the outlook over the next 4 to 5 years from my viewpoint. Again, not giving financial advice to buy anything. I'm definitely holding MSTR. I continue to hold the stock. And, I got in early 2024 when it was a lot lower than it is now. So even if I bought in later, I would still be holding the stock right now. So $2 billion, if you look at how strategy's built, $2 billion recently of Bitcoin that they bought. If you look at their capital stack right now, you're looking at about $8.2 billion of debt that they've used to buy Bitcoin. You've got about $8.3 billion of preferred stock, and then you've got the equity, So when you're looking at the market and you see them issuing more of the common shares in the marketplace to go buy Bitcoin, that's the play down here of $63 billion worth of Bitcoin that's been acquired on this has been a result of issuing common shares. But you see the preferred stock like Strife and Stride and Strike and Stretch. These are the ones that are really pulling up and becoming the hot topic. And we're going to get into Stretch a little bit today because that's the one that a lot of people are comparing to a money market fund, even though it's not a money market fund. but it could potentially gobble up a lot of the dollars that people are putting in money market funds, because there's trillions and trillions of dollars that are put into it. And so if this becomes the alternative stretch for putting your money in a safer, quote unquote, place, or a safe place, then strategy can continue to raise more and more money to acquire more and more Bitcoin. And you see them doing this. They just did it last week, and they continue to do it. So let's understand strategy sort of like a building that has 3 layers. Debt equals the money that they borrowed, which I just showed you. Preferred stock equals a special type of shares. So if you don't know a lot about strategy, when you hear all these things like stride and strife and strike, you can get my book down below. It goes into detail about strategy if you really want to know about the stock. But I would say, in a very, very simple way to understand stride and strife and strike, these are basically, they're not fixed income products because they're preferred equity, but they kind of operate in that way where they're designed to spit off sort of like a fixed income in the marketplace. And the reason people like Stretch, the new one that's out right now, is it's spitting out 10 or 11%, and it stays pretty steady in terms of its price. So these preferred stocks are becoming hot in the marketplace. If I'm somebody who's retiring, if I was looking at my portfolio, let's say, and I was maybe 65, 70, 75 years old, and I got educated first on strategy, and I also got educated on what Michael Saylor talks about in terms of Bitcoin, and I understood the stock and I understood the company, I would strongly consider myself personally in the future putting some money in Stretch, because it's just it's brilliant. If you look at the 10, 11% returns versus what people are putting in terms of either CDs or bonds, there's no comparison in the marketplace. So these products are going to become hotter and hotter, and the stronger that strategy gets over the next 2, 3, 4, 5, 10 years, the more these products that they're issuing, like Stride and Strife and Stretch and Strike, are going to become hotter and hotter, because you're going to have a company whose balance sheet is stacked with more and more and more Bitcoin. They're going to become more and more stable as Bitcoin becomes more and more of a stable asset, as we're seeing, and becomes purchased by institutions, as we're seeing. It becomes purchased by people all across the country and the world. You're going to see strategy's strength growing because Bitcoin's strength is going to be growing. And then these products that they're issuing in the marketplace are going to grow with more stability, more people are going to have a stronger point of view in the lasting viability of these products and trust in these products, and strategy is going to gobble up the market. So we have not even begun to see what this company is going to do over the next 5 to 10 years. I think most of the marketplace is looking at strategy and they don't fully understand what they're doing. And if you look at Saylor's actions, he 100% understands what he's doing, and he continues to do it week after week after week, because they're going to gobble up the Bitcoin supply. And for that, those of us who are shareholders, I can speak for myself, are going to have a very, very, very bright future. Okay. Again, not financial advice. Do your own research on stuff, but preferred stock, watch their preferred stocks, get educated on the preferred stocks, watch what Stretch is doing now in the marketplace. It's truly phenomenal. And then, of course, the equity, the issuing of common shares in the marketplace, still a highly misunderstood subject for most people. They're issuing shares, they're diluting shares. Yes, but it's accretive for the shareholders. The whole goal of these companies is to get you more Bitcoin per share. So strategy exists to get shareholders more Bitcoin per share. BMNR exists to get shareholders more Ethereum per share. And when they're issuing shares above when they're issuing shares at a premium, it's accretive for shareholders. And we've seen maybe in the last couple weeks or months, maybe there's times where they've issued when the shares have not been at a premium or trading at a premium, but it's few and far between. And in the main, they're issuing shares at a premium. They're picking up more Bitcoin per share for their shareholders. And in the long run, this is super good for shareholders. So the big thing happening right now, preferred stock, obviously super important. You pay attention to it. You look at these different types of preferred stocks here: Stretch, Strife, Stride, Strike. If you don't know a lot about them, you can read this just briefly and see it, or you can get my book down below. It goes in detail into what these are. I also break everything down in a 5th grade level. I really think that understanding strategy is one of the most important financial studies right now that could be going on in the world, and understanding how this company's operating. People who understand this will understand where the financial future is going. To not understand this is a grave mistake, I think, for anybody in the world of finance. So this company is absolutely crushing it. And, in terms of their execution of buying Bitcoin. Clearly, the stock is down. I'm not saying that the stock's up, but their execution of buying Bitcoin is unbelievable. So they have all these different types of preferred shares, and the best plan right now is stretch. So if you see this in the marketplace and you see Saylor just bought $2.2 billion worth of Bitcoin and they bought a big majority of it with stretch, that means there's a lot of people out there willing to put billions of dollars, or a small group of people willing to put billions of dollars and give that to strategy in return for the yield that strategy is going to pay, or I should say the dividends that strategy is going to pay on these products. They give the money to strategy. Strategy takes the money and buys Bitcoin, and that gets the shareholders more Bitcoin per share. So that's the basic game of what's happening. Stretch is designed to feel like a money machine that pays you more than anything. It gives a return that's close to 11%, say 10%. It can pay monthly. And Saylor calls it digital credit, real yield. So if you look at Stride, you look at Stretch, you look at Strife, you look at Strike here, you look at 13.12%, 11.10%, 9.97%, 9.48%. All right. So you look at the effective yield of these products that he's issuing in the marketplace, it's pretty spectacular. All right. So people like it because it's less scary than MSTR stock. So they like these different products. There's people who want to buy MSTR, and the people who buy MSTR are in for a rocket ride and a roller coaster, as we've seen. There's times where the stock can shoot way up, and there's times where the stock can shoot way down, as we're seeing right now. So there's a huge market out there for people who want more conservative returns, and that's why they would look at Strife and Stride and Stretch and products like that, more stable but still give strong returns, right? So here's the crazy part. If you look at strategy, it's raised $25 billion in 2025. So when you look at a year where the Bitcoin's been down, Ethereum's been down, everything's been just like crappy in 2025. And you look at this company and they still raised $25 billion. So crypto has a rough year. Strategy still keeps going and keeps going. And we also see the same thing going on with BMNR. I mean, they keep buying and they keep buying and they keep buying Ethereum. Regardless of what's going on right now in the marketplace, they're sticking to their strategy. Strategy is going to potentially get to 4 or 5% of the supply of Bitcoin. Who knows if they can accumulate that much and get to 5%. I think BMNR will definitely get to 5% of the supply of Ethereum and beyond. So the big change with strategy is they started using more preferred stock and less debt. So you remember early on when strategy was making purchases, they were using a lot of convertible debt. And that was, stacking up on their balance sheet. And people were saying, oh my God, well, if they use convertible debt, they're going to have debt on their balance sheet. What happens if strategy stock drops? What happens if Bitcoin goes down to 20,000, 25,000, 30,000, 40,000? Strategy is going to go out of business. And they've deployed a preferred stock strategy that is far superior than the issuing of convertible debt. And so they don't have a lot of debt on their balance sheet compared to their Bitcoin holdings. And when you look at the viability of this company in the long term, it's super, 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 super strong. And Bitcoin could drop all the way down, and strategy is not going to be having a problem. Okay. We'll talk a little more about that in just a moment. Stretch stays stable around 99 to $100. That's why people like it in the marketplace. All right. So when you look at the price right now, 99.55 stays super stable. Some of the other products like Stride and Strike, when the market was rough, like as it is right now, you'd see it drop from 100 down to 94, 93. People didn't like that. Stretch is super stable. The current dividend right now you see is 11%. And that's pretty impressive as you see what's happening with this type of product. Even when the markets get scary, Stretch stays close to $99 to $100, and that's a good thing. That's why people trust it. That's why more people are laying in. If you look at this Form 8K that talks about the Stretch stock right there of close to $300 million, they raised almost $300 million from Stretch. Okay, so while the other products raise very little, people are choosing Stretch the most, which is a good thing in the marketplace. And if you look at this as a comparable asset for Stretch to money market funds, you look at the size of the market with money market funds, it's about a $7.4 trillion market. So if you look at Strategy's long-term play, if they continue to issue more and more Stretch, they have an opportunity to compete with the money market fund assets that are out there in the marketplace, 7.4 trillion. And as Strategy gets more stable, as Bitcoin gets even more stable, as the word starts to spread, smart investors are going to look at this and go, wow, a money market fund is paying X return. Stretch is paying 10 or 11% returns. people are going to start looking at this differently and making different decisions about their future. And quite frankly, if you look at the marketplace right now of inflation, a lot of people look at the S&P 500 over the last 4 or 5 years, and you see these returns of like 16%, 18%, 20%. And we look at it and we go, wow, the S&P 500 is doing so amazing. But what they forget is that the amount of money that's been printed in the marketplace, you can't forget about COVID, where the money supply went up by about 40% over a 2.5, 3 year period. And so, that money supply going up, as more money going into the marketplace, more money in investors' hands, people started putting in the stock market. It drove the stock market up. And so when you really look at where we're at right now, the story, back in the early 2000s when I was in the financial services business was always like, if you get 10% in the market over the long term, you're doing really, really good. Well, that was early 2000s. If you adjust that for inflation and you do even 3% inflation on that, like today's 10% compared to 20 years ago is more like 16, 17%, right? So the story of like 10% is going to be great for you if you get 10% in the market over a long term. 10% is not good over the long term because of taxes, inflation, asset inflation. If you have a money manager or fund manager, they charge a fee. So you take all of that out and 10% is barely getting people ahead. So when you look at products like Stretch that are paying 10, 11%, it's at least keeping people paced out with what's happening in the economy so they can at least keep their head above water. So that's why options like this become more viable. But in terms of investing in the stock market, from my own viewpoint, the years of 10%, good rates of return, are dead in terms of the stock market. The S&P is putting in new normals that are around 15 or 16%. Remember, that's adjusted for inflation from 20 years ago. So you got to get in present time to go, the story of 10% is no longer good. The story of 16, 17% is kind of the hurdle rate. And that's where you need to be getting ahead today. Because if you're not doing over 11, 12%, you're not getting ahead because of all the things that I just listed. That's why these products are considered, in my viewpoint, they're safer, and Stretch is a better option, not financial advice, but better option for people who want to retire. Rather than 5%, I'd rather have 11% and at least have my head semi above water from a more conservative fixed perspective, even though it's not fixed income, it's preferred stock. But that metaphor stands true, okay? So Stretch is competing with the money market world, as I just said, and that market is massive. Money market funds alone are around $7 trillion, as I just said, and Stretch is kind of like the new digital money market. Now, it's not a money market fund. It's just used as a metaphor on this, so take it with a grain of salt. So we know why Stretch is getting so popular, but here's the crazier part. If you look at the big money's buying too. So you look at the marketplace and you look at like who's buying. You've got Vanguard, you've got Capital International Investors, you got BlackRock, you got Morgan Stanley. So when you look at some of the top ones here, a list of people holding MSTR stock, you see names like Vanguard, BlackRock, Morgan Stanley, JP Morgan, UBS, and even big Canadian banks like Royal Bank of Canada. So this is just like, it's just the viewpoint of like these large institutions are buying into strategy. They're buying up their products. It's like the writing's on the wall. If you look at the movement of large institutions, moving onto the blockchain, just look at that period. You have so many of these institutions that are moving onto the blockchain. And if you watch my previous videos, we know why they're moving onto the blockchain. It's obvious. The blockchain settles faster. It's more secure. I can send money across the country, across the world. So it's borderless. If I want to pick up clients and I'm a large institution and I'm operating on the blockchain, I can have somebody in freaking Tijuana investing in my exchange. If I'm a Morgan Stanley or a Vanguard or a BlackRock. So institutions are going to push this because this is where the money is. They're borderless now. They're also going to push this because they want to trade 24/7, 365. Current exchanges, you can't do that. So it's clear that these institutions are moving on the blockchain. But when you look at the writing on the wall and you look at it, these institutions are also holding MSTR stock. It's like that's even more writing on the wall, considering that the blockchain is a stable technology that one can build on that's more secure and has all these advantages. When you look at MSTR stock and you're like, these companies, of course, it makes sense for them to build on the blockchain, but for them to be investing in MSTR stock and products, what is going on here? Clearly, they know that MSTR holds Bitcoin as their underlying strategy, quote unquote, because they're building a Bitcoin bank, metaphorically, and all the products they issue are backed by Bitcoin. So it's just a smart play for these institutions. and you see more and more of what's happening in the marketplace, and it's pointing in the direction of where the world of finance is going. And the world of finance is going to digital finance. And for one who doesn't really understand that, again, you can get my book down below, Money Game. When you read it, when you compare traditional finance to digital finance, the future perspective on this is a no-brainer. Clearly, you can look in short term and you can go, oh my God, the market's dropping and everything's so volatile and Bitcoin's dropping and all the stocks are dropping that are crypto and digital. But ultimately, if you take a long-term viewpoint and you go, like, what is the future of this world? It's pretty obvious when you look across sectors and industries. Like AI is taking over the planet right now. That's a digital world, a digital universe. You look at more and more businesses that have moved online since COVID. I mean, it's not uncommon for all businesses to do Zoom meetings now. That wasn't a common thing 4 or 5 years ago. The number of businesses that are moving online to actually market their businesses versus just offline marketing and shaking hands. And then you just look at the world of finance, like why wouldn't it go digital? Like emails, digital, right? We're no longer doing snail mail to the degree that we're at. So the obvious pointers on this are pretty obvious. And if you fast forward 20 years into the future and you're looking back, it would kind of be comparable to what Michael Saylor says. It's like wooden ships were great until we invented steel. You know, bringing a bow and arrow to a gunfight doesn't make a lot of sense because the gun's going to win. Bow and arrows were great during their time. So when you look at the world of traditional finance, we're looking at a world that's literally bow and arrows. We're looking at a world that's literally wooden ships. It may still have its relevancy in the feeling of today because it takes time for people to catch up because most people aren't in present time with the world of finance. And so, you know, you got to look at where the puck's going. Wayne Gretzky always said this: I skate to where the puck is going, not where it's at. And the world is clearly going to digital finance. There's so many indicators that point to that. So to not get educated on, to not understand it would be just a big mistake for anybody living on planet Earth. Okay. So there you have it. The big money is showing you exactly where they're going. If you want to take a look at also some things here, I'm going to show this. I showed this the other day. I've got a really cool trading strategy that I've used for a while. I'm going to show you the charts on this. And this is just a good way to analyze Bitcoin and analyze BMNR and analyze Ethereum and analyze strategy. It's why I use it. Now, this technology, like, hats go off to TradingView and James and Invest Answer. So I'm not the creator of this technology. I just use it effectively. All right. So I'm just going to educate you on this because this is an incredibly effective tool that one can use to look at where stocks are going in the marketplace. And so when I look at when I'm making decisions on BMNR, I've been trading BMNR for really the last 5 months or so. And so when I look at BMNR, one of the things that we've been looking at is looking at the 2-hour charts. And so these are the 2-hour charts of BMNR. Now, not to get like, this isn't really I'm not pointing this out from a trading perspective per se. I'm just pointing this out from a simple analysis standpoint. One could trade this, but this is a very easy thing to look at and understand. So I'm just going to point this out and show it to you. So when you look at this, and we look at the charts here, this is based on 2 hours and it's based on BMNR, right? And so if you look at the charts, it's a little bit wonky right here where it's giving you mixed signals. So when you see blue, it's clearly bullish. When you see yellow, it's not. But over the last couple months, if you watched my video the other day, I showed that the signals on this chart have been incredibly powerful for trading BMNR. So I hold BMNR. So in the situation where I hold BMNR, I'm following these charts. When I see the blue here, this is basically a trend line that James from Invest Answers created. When I see the blue go to yellow, that's when I sell out of BMNR. And if I had made this trade here when BMNR was at $32, if you want to see where it is, go all the way to the right here. Follow me all the way to the right. That's where the price is. So if I had sold out when BMNR was around $32 and 20 something cents, then I would have watched BMNR go all the way down here. And then the signal for me to buy back in on BMNR wouldn't have come till about $30.79. So I would have sold out at like $32.30. I would have bought back at $30.80. If you look at that, that's about a 5% pickup of more shares. So with my portfolio with BMNR, there's a portion that I just hold long-term and I don't trade. And then there's a portion that I trade. And so for me, when I trade it, I sell out high and I buy back low. So that if you're looking at this, this it goes to, and again, kudos to James at Invest Answers. I'm giving credit where credit is due because these are his charts. So when you look at this here, that's where you get this return, which is pretty insane, of like 5%. And it's over a period. If you want to put your eyes straight down here, this is over a period of like, you got the signal around January 7th is when the signal came in. So when you look at trading this, and you've seen just big, like BMNR has been moving in patterns for how long, right? Over the last 2-3 months, like it's up to 30 something. It's back down to 28 or 27. Like you're just sitting there and the stock's doing nothing. And there's no gain for anybody who's just sitting on it, right? So for my community and my friends that I've been sharing this with, and they all, they all go pick up the software from James. And when I share it with them, I'm like, look, just watch these trend lines, dude. Watch these trend lines. Like this is over the course of January 7th to January 12th. It's 5 days. If you had traded this, sold out and bought back, you pick up 5% more shares. And then you go look at this here. I mean, it's like taking candy from a baby, man. If you're like, I don't care about trading, owning BMNR, it's too risky or whatever. I got friends of mine who I'm like, yo, like you don't have to know anything about the stock. Let me just teach you this thing, because right here, you see the signal comes in when it goes from yellow to blue. The signal comes in where on January 2nd, it's a signal to buy BMNR. Now, BMNR is sitting at $28 here when I would have jumped in. I only jump in when it gets fat. When the blue gets fat is when I jump in, right? Not when it's like a little mini blue here. When it's fat, I jump in. So it's like at $28.15. And then it goes all the way up here to $32, man. And you would have sold out when the yellow gets fat at about 32 bucks. So 28 something you buy in, like where is this? 28.12 you buy in and you sell out at 32, and that's what? That's over 10% gain. It's over a 10% gain, and that's over a period of January 2nd to January 7th, 5 days you pick up 10%. Now, I like the tech credit goes to TradingView and Invest Answers, but putting this together of finding this stock to trade, I started researching the stock 5 to 6 months ago, and I started trading it. And man, the signals on this puppy is beautiful. And the reason you get such big moves is because of the volatility, right? If the stock wasn't volatile, it wouldn't even be fun to trade. I'll show you one more on this. Again, if you want an in-depth video on this, you can go down below, and there's a full free video on this that shows you in-depth how to do this. And it shows you not only on the 2 hours, but like somebody wanted to trade on a daily basis, it shows you the 3-minute charts. But like I have people all the time who are friends of mine who tell me like, Ted, I don't want to trade. I don't want to look at the screens every day. I'm like, listen, in this scenario that I pointed out, you're trading every 5 days here. You're literally making a move every 5 days. Now, none of this is financial advice, tax advice, or legal advice. It's just get educated on if I can pick up more shares of BMNR, which I've been doing, and I can do it in a simple fashion like this, like finding this baby was a gold mine. Here you would have gotten faked out. You see the yellow goes to blue and it goes back to yellow. So when I factored in over a 2-month period, even if I got faked out and it's like it went from yellow to blue and then back to yellow, I take my losses on that. So I factored in whatever my losses would have been, which would have been few and far between, because look how clean these lines are. Again, you're trading yellow, like on this, hypothetically, education-wise, yellow to blue, blue to yellows when you're selling, and buying back in yellow to blue. And if you watch the charts, it's insanely accurate. Insanely accurate trading these trend lines. Look at this one. I would have sold out here at the blue, and I would have, over here at the blue. Here, I would have sold out when it goes blue to yellow, but when it gets fat on the yellow, $38, right? And then all the way down here, you buy back BMNR at 29 bucks, man. That's like what is that? Like, that's like 20% return right there. 20% return in shares and picking up more shares because I'm selling out high, buying back low. But the reverse works too. If you want to buy low, and again, I have peers of mine who are just like, I want to buy in. Let's just go back here and just get out. I want to buy in cash. So like buy in, I buy the stock, and then I get the signal here. Like I bought in here when it goes to blue, and then I sell out here when it gets to yellow. It's a little fake out here, but even if I sold out here, I still made a profit. Okay. But if you had bought back in here or sold out here and like, oh my God, I made a mistake, and you bought back in here to follow the trend lines, you would have had a little loss there, but then you would have picked up this massive gain all the way up here. So it's just like, you know, you're going to have times like when I'm doing this, I have times where I lose, but the great majority of the time I win. And that's why this works. And while the rest of the world's sitting there, who might own BMNR and they're like just like in apathy, because I understand, like I bought in a BMNR when it was at $60, but I traded. There's this sweet time frame where I was trading the stock in September. It was September, it was August and September, and I was just trading on a daily basis. And I was just picking up more shares for just 2 months straight on it, because I was following these charts, the daily charts and the weekly charts. And so while it was dropping at that time, I remember when we went down from 60 and we just touched 39 at that time, I was picking up tons of shares of BMNR on the way down. So while holding this, buying the stock up high, it's like, okay, that's no bueno. Nobody wants to buy high and it drops all the way down. But for me, it's less of a deploying that strategy is less of a problem, because I'm able to pick up more shares and lower my average price on the way down. So it's just been a brilliant play on this type of technology. Kudos to TradingView and James from Invest Answers on it. But it's been a beautiful play on this particular stock. So there you have it. It gives you a little data on what to do on a daily basis. If you want more data on MSTR, you can go down and get my book down below. And it talks about MSTR, BMNR, Bitcoin, Ethereum, and it talks about traditional finance. If you want to learn more about the trading strategy, there's a free video down below on that goes more in depth. But let's get back into MSTR here a little bit and talk about what's happening, okay? So big institutions are buying MSTR. These are the biggest money managers in the world, and they've been buying more after MSTR dropped in price. So that's the interesting part, right? So retail is clearly getting freaked out. There's lots of manipulation in the market that's going on. A lot of people come in and they're like, oh my God, like they're selling. And what's happening with these larger companies? They've been buying more after MSTR dropped in price, because obviously that's the smart time to buy when it's low. Right. So there you have it. Will MSTR get a margin call? Highly, highly, highly unlikely. If you look at Bitcoin's price around $90,000, their current Bitcoin values around, they got about 63 million. And so the chances of them going to be insolvent are like highly, 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 highly unlikely. Okay. So that's the big question in the marketplace. Like, what happens if Bitcoin drops below 75,000? Will strategy get called on margin? What happens if it goes all the way down to 30,000 or 40,000 or 20,000? No, they're not going to. So, and again, that's hypothetical perspective. But if you just look at the math and you look at their balance sheet, they wouldn't get liquidated at that price point of Bitcoin at 20,000 or even 10,000. Okay. So that's the math. You look at it, 75,000, 50,000, 20,000. MSTR is not going to have issues. Clearly, as a stockholder, one would have major issues because Bitcoin went down to 20,000. MSTR would absolutely tank and crash. And that's why you always got to look at the inverse side of this, which is MSTR, and holding the stock is incredibly, incredibly volatile during the long term and or during the short term. And it's very, very risky in the short term because it's super volatile. Okay. So that's why Saylor keeps saying there's no margin call that's going to happen. Has Bitcoin ever dropped that much to where it's gone down to like $1,000 per Bitcoin? Way, 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 way back in the day when Bitcoin was obviously much lower priced. All right. So I don't think Bitcoin is going to drop 98%. And we've seen Bitcoin go down 80%. We've seen it go down 88%, but not down to 98%. So there you go. That's the story on strategy. Strategy is not going to blow up. Strategy clearly is volatile. You need to get educated on the stock. It's not something that one just like all of a sudden flies into the stock and is like, I'm going to own MSTR. It's one of these things where you get educated on Bitcoin, you get educated on strategy, you get educated on Ethereum, you get educated on things like BMNR and digital asset treasury companies. You just get educated. So why would I buy MSTR when I can just buy Bitcoin, right? MSTR grows in 3 different ways. And this is from Adam Livingston. Adam Livingston's great. Shares great data on MSTR. And he explains it like this. Like, here's the reasons why one would buy MSTR over Bitcoin. In theory, number 1, NAV growth. If Bitcoin goes up, MSTR's Bitcoin value goes up too, in the main, not all the time, right? Michael Saylor assumes Bitcoin grows around 30% per year. And so the idea here is if Bitcoin goes up, strategy in the long term will go up by more. Long term meaning over 4, 5, 6 year periods. You've got amplification. This means that MSTR is built in extra push. Like if Bitcoin runs at a speed of like 10, MSTR can run at a speed of like 12.5, which is like 25% more. All right. Again, hypothetical. It's happened in the past. We've seen times where it's happened in the past. We've also seen times where Bitcoin's going up and strategy is going down. So you just got to be mindful of it, right? But the idea is if Bitcoin goes up by 30%, strategy could go up by 37% or more, okay? Then the third thing of why one would own MSTR over Bitcoin is Bitcoin yield. Over time, MSTR tries to get more Bitcoin per share. And so if you watch MSTR all along the way of like issuing common shares in the marketplace, the purpose of that is to pick up more Bitcoin per share. When they issue preferred stock, they want to pick up more Bitcoin on their balance sheet. Their whole game is to get more Bitcoin and to get more Bitcoin per share for the shareholder. So what that basically means is if I own 100 shares of MSTR and strategy keeps acquiring more and more Bitcoin, that means my Bitcoin per share goes up. Now, my Bitcoin per share only goes up if they're acquiring more Bitcoin in an accretive way, where when they issue the common shares, they're issuing those shares when the shares are trading at a premium, not when they're trading at a discount. All right. And that's how it becomes more accretive for the shareholder and how one gets more Bitcoin per share. And as a shareholder, one doesn't have to buy more shares. They just hold the shares and Saylor gets you more Bitcoin per share. And that's what he's been doing. So that's pretty much the understanding of it. It's a nice 3 good points from Adam Livingston there. And even if MSTR never buys more Bitcoin again and just holds what it has, if Bitcoin keeps rising long term, MSTR can still become very big. Now, we know that MSTR is going to buy more Bitcoin. So it's not, this is a moot point because they're going to buy more Bitcoin. It's just that simple. Okay. That is their plan and that is their game. So I'm not going to look at price points either here, but if you look at BMNR, BMNR is doing the same thing here with Ethereum. And if you've never watched BMNR before, it is the stock to watch. It is the most fascinating stock, I think, in the crypto world right now. I say crypto world in general terms because it's a stock that has Ethereum on their balance sheet, but it's one of the most fascinating stocks to watch. And why is that? Because they are following this strategy playbook. And they adopted this strategy playbook 6 months ago. And now you look at BMNR and they've now staked 46% of their treasury. So not only are they acquiring Ethereum and they have about 3.5% of the supply of Ethereum, but now they have staked 46% of their treasury. So if you're watching my videos months and months back, the talk was like, when is BMNR going to stake Ethereum? And it's such a big deal because not only do they acquire more Ethereum, but when they stake it, they're going to get a yield off of it. And if you look at the staking of Ethereum of 55,000 ETH, that staking of Ethereum could produce $162 million per year. So now you have a company that's increasing their balance sheet with Ethereum and they have an income stream coming in every single year. Wait till the rest of the world figures this out and starts to value this company, because this is something that the world's never seen before. So, and this is almost 37 cents per share straight to the bottom line because of the staking and the income that's coming in to the company now. So if you look at this, BMNR Bulls just said that Bitmine just staked another 503 mil, and they've staked an additional 171,000 Ethereum. So they staking, and one day they might stake all of their Ethereum, and we could see some massive income coming into this company, which is pretty cool. So that's the story there, Morning Glory. I hope you enjoyed it. If you want to get my book down below, you can grab my book. It's 100% free. It was a passion project to write the book. I spent a lot of time on it. I come from the world of finance. So I grew up in traditional finance for the first 13 years, and I watched the 401k plans. I watched traditional investments and high fees in mutual funds. I watched that entire game. And it was just interesting to just watch traditional finance. And then years later, get into Bitcoin in 2018 and realize, wow, it's like I've been playing the wrong game all along with traditional finance. And when Bitcoin came along, I consider it a savior for the financial world. And so I wrote this book, Money Game, to talk about traditional finance, because I know there's a lot of people out in the world that are still in that marketplace, and there's nothing wrong with that, but they don't have the education on digital finance. So like in my business, we're big on looking at stats every day, and one stat, unless it's compared to another stat, means nothing. Like if you tell me $1 million is good, how do I know $1 million is good unless I compare it to the other stat, which is $10 million? I'm like, well, $1 million isn't good compared to 10 million. 10 million is better. So if you don't compare the traditional finance to digital finance, you can't really have a full understanding of the financial landscape in the world. So I wrote this book to help people who don't understand that. And we've gotten great feedback from people. It's now just a digital version. You can download it for free. But the idea is, like, if somebody doesn't understand Bitcoin, you don't walk in and pitch the solution of Bitcoin to somebody, because they're not gonna take it without understanding the pitfalls of traditional finance. And so when you explain the problem first to somebody, and here's the pitfalls of traditional finance, here's what's good about traditional finance, here's what's not so great, and then you compare it to Bitcoin, somebody wants a solution because they're like, oh, solution A in traditional finance is this, solution B in Bitcoin in the future is this, and they can stack up the data and look at what's better. And most of what people say about Bitcoin or strategy or BMNR or Ethereum online that's negative, it's because they don't understand. That's the thing. Now, clearly sentiment comes in the marketplace of, like, we all get emotional. The stock drops. Nobody's happy, right? So the natural reaction is like, damn it, strategy, BMNR or whatever. And people get emotional, right? But there's a lot of what's spread out in the marketplace of just misunderstoods. You've seen this in any subject where somebody goes to study something, they get a misunderstood, and then they put the subject down, a misunderstood word, and they never look at it again. So, and they kind of like move themselves away from the space, and they get angry at the space. This damn digital finance stuff, because they don't understand it. If one stacked up traditional finance and they put it next to digital finance, they would see that there's not just, maybe one way for them. Maybe there's a blend for them. Make sense? But they would definitely see, anybody who analyzed the data, that traditional finance is not the answer moving forward for the next 10 to 20 years. That would be the obvious answer. That's why somebody should read Money Game. Okay. So you can get my book down below for free. You can get my daily trading strategy. I promise you'll enjoy the book. If you don't, it's free. And I'm sorry I wasted your time, but I think you'll really enjoy it. So subscribe to the channel, like the channel, and I hope it serves you. And we'll see you guys on the next show. You can comment down below. What do you want to hear more of? MSTR, BMNR, and then I'll take a look and see what we'll do next. Hope you guys do well. Have a great day, and I'll see you on the other side.